So what I just did is extremely risky, and I wouldn't suggest anyone else doing it. Ladies and gentlemen, welcome to WealthDom. My name is Nova BM. Today we're going to take a look at what the heck happened last week. We're going to talk about earnings, Nvidia especially. We're going to talk about Trump and Zelensky. We're going to talk about the markets. By the way, nothing political about that, but it did influence the markets, especially on Friday, as you can see. We are going to talk about this major correction that we just went through, which is starting to recover, but I'm still bearish, although, as the title says, I'm all in. And I was right about the prediction, about the last week's market events, about my risk assessment. I was at let me take a look. Where was I? 60% risk for the last week, and I was kind of right. We did have a major correction, or the correction did continue this week, and then it went well back up again. But if we take a look at the S&P 500, it just barely holding out here on the 50-day moving average. So it just stopped. The 50-day moving average it went up and it went back down again. That's why this candle not filled completely on Friday, February the 28th. So let's talk about last week. Last week was from February 24th till the February 28th, and we have major economic events. We also have consumer sentiment, PMI data, jobless claims, which did influence the market. Most interesting news was about durable goods, which came in at 3.1 instead of 2%, and then GDP came in at 2.3, exactly as expected. Prior was 3.1, so we are slowing. The US economy at least is slowing. We know that the rest of the world is slowing, but now, how about that US exceptionalism? I think we're going to see a lot of weakness in the markets. But this is going to come out maybe or in the earnings report of the first quarter or even the second quarter. That's going to be extremely interesting. Of course, we also have core PCE, which came in as expected at 0.3%. We had the personal income, which came in at, well, better than expected, 0.9%, so it kind of rose, and personal spending went negative this time with 0.2%. We had a forecast of 0.1%. So what did all of this do? Well, until Tuesday, actually, we only had declines in the market. You can see here we had the last 5 days a constant decline, and then we broke out of it. We kind of retraced to this 50-day moving average, but enough about that. What is wrong with the market? First of all, consumer sentiment. Now, reports indicate that declining consumer confidence, which raise concerns about future spending and economic growth, majorly impacted the market last week. Also, this provision points out the downfall of spending, actually, of the power of spending of the consumers. Now, we also had a couple of treasury yields, which will fluctuating, especially the 10 and 3 months yield. Trump once more announced that he is going to implement tariffs on Canada and Mexico, and particularly those on China will be extremely important. Now, the major stock market movers were in the AI sector. Although the S&P closed up positive on Friday, we have the entire week of negative. Monday, Tuesday, Wednesday, Thursday was the worst day, and then Friday we try to come back up. Now, if we fail this test on Monday and on Tuesday, then I could see a testing of the 200-day moving average. Now, we also saw Bitcoin having a major retracement. Take a look at here. Bitcoin, it hit the 200-day moving average. This, if you would consider buying this dip, I could see it as a major trading opportunity. I did not buy Bitcoin. We are going to come to my trades on what I did last week. But before that, let's also talk about the general market trends, which the major indicators show us that experiencing periods of both gains and losses, which concern about the economic growth and the potential interest rate changes drive the overall sentiment. Also, we saw a lot of institutions selling the last week. So this was just a general trend in the entire market. Now, on the earnings, Nvidia reported excellent earnings, but it wasn't mind-blowing, and the market reacted as we expected, because companies in the largest technology sector, especially those related to AI, were closely watch. So as soon as Nvidia reported earning, and it is the prime example here, their earnings report have had large impact on the markets. They went down. Let's just take a look here at Nvidia. Right after they reported earnings, right here, they did report beat on revenue, beat on EPS. Still, they fell, and then they raised, and then they fell again on Tuesday, and then they tried to. So they're under their 200-day moving average. Could this be a continuous correction because they didn't has a 200-day moving average right back here in the last January of 2022? So maybe this is a hint on what's to come. Also, Dell reported earnings. Although they reported good earnings, their stock just fell. Okay, they missed on revenue 2.72%, and then the stock went downwards. Okay, let's talk about my trades. So let's go right here in our Wealthtom application. So trades, what we bought, what we sold, why I did it. Let's go to close position. So I completely closed following position. Chipotle, why? Now, let's just say that the fact that Chipotle is kind of in the consumer goods and yields no dividend. It has a double top here. So on a technical level, although it's trying to trigger here a MACD buy signal once more, I don't know if Chipotle is going to go up to its prior highs in the next 1 or 2 years. Now, please take this with a grain of salt, especially you, those out there who are Chipotle holders. Hold Chipotle. Also, if you want to get in at this price and want to hold it for a couple of years, perfect price to get in. Could this go even lower? Well, let's just take a look at this on a larger scale. Because Chipotle currently is under its 200-day moving average, and it's trying to consolidate here. Maybe it's going to go even lower. I don't know. I do know that it will be impacted by tariffs, and if there is consumer weakness, then it's going to impact Chipotle 100%. So if you want a safer stock, maybe Walmart or even Costco would be a better trade than Chipotle. So that is why I sold my complete position in Chipotle. I didn't have that much gains. Actually, I bought it back then. I made a little trade, made some more money on it. I think I made roughly 200, 300 euros. So I was plus 30% at its peak. Didn't do anything, just hold it, and then it went sideways. Maybe it's even a mistake for my part, but that's all about Chipotle. I closed my position in HP. Also thought about closing. So this is now where I closed it. I closed it actually up here on Monday, something like that, or Tuesday. And then it went sideways for HP. They also reported earnings. Although they had goodish earnings, the stock just sold off massively. And I think it's going to continue, or at least try to consolidate here sideways and then do just absolutely nothing. Now, why are my hopes dead for HP? Because it was a trade, and that trade went sideways. I should get out of the trade even earlier, but I was still thinking about maybe it's going to have a comeback, and it does have a 3.37 dividend yield year to year. So could be a good holding, but it just isn't performing. And I said, goodbye, HP. See you later. If you to convince us that you are a company too worthy to hold. Also, close up my Broadcom, and I closed it up as soon as I saw that this is going to go sideways. So Broadcom, took my goodbyes from it. I do think that Broadcom is a very, very good company, and we could see a major comeback here from Broadcom, but I'm out of money. So I'm just going to say it right here. I am now at actually 25 euros, or $23 of cash, which is basically zero. Closest zero as you can get. I'm all in currently, and I'm just waiting for a rebound. And on that rebound, I'm going to go pretty hard into cash. Something about 20%, maybe even about 30% into cash. Also close my position in Walmart. Walmart, yes, exceptionally good company. Even a 0.86% dividend yield, and growing their dividends. But Walmart, as they reported earnings, although reporting good earnings, the forecast, we talked about this last week, the forecast was pretty weak. They do see the consumer weakening. So I'm just going to stay on the sidelines now for Walmart. Now, if this company has a major correction, I would definitely buy more Walmarts. Once again, not financial advice. Please consult a financial advisor. I'm not a financial advisor. Never buy or sell stocks. Based on my opinion, always do your own research. JP Morgan also closed it exceptionally good company, but I'm going to wait with JP Morgan. Wait. Let's see what happens. It's due for a major correction. And right behind, let's just take a look here at the heat map, right behind Berkshire Hathaway in the financial sector, JP Morgan is the biggest company out there. So if you're, sorry about that, looking to buy JP Morgan, although they have had a correction here, they do yield 1.85% yearly dividend, constantly growing their dividend, exceptionally good company. With Jamie Dimon in the top, I think we have a great CEO there. Hopefully he's going to hold out as Warren Buffett does for a long time up there. But who knows? Once more, it is at a PE, current PE. Let me just take a look here. It has a major PE. 13. That's too big for a bank. Under 10, it's a buy. 13, hold it, watch it. It's at its peaks. So I would say take care with JP Morgan. It could have a major correction. Okay, so that's it for the positions I closed. Let's see. Positions that I reduced in were as following. Eli Lilly. So Eli Lilly has now, Eli Lilly and AbbVie and also Novo Nordisk do have now a buy trigger due to the fact that the GLP-1 shortage, or not the GLP-1, so they do sell GLP-1 drugs. That's why these two companies are growing as crazy. They're definitely overbought here. Let's go at the 1-year diagram. Could this go even higher? Of course it could go even higher, but I just reduced my risk right here to currently 1.63% of my portfolio. So you can see it's pretty heavily down here. Let me see, weight them accordingly. I did reduce my position to 1.63% of my portfolio. Eli Lilly, ticker symbol LLY. Great company, but it does live now on the GLP-1 drugs, potential of even more growth. Also yielding a 0.57% dividend. Pretty good, I would say, for a growth company. But when, not if, when they're going to have a correction, I'm going to revisit Eli Lilly. Of course, great company. Definitely, I'm definitely bullish on the GLP-1 drug. Next up, okay, let's take them as positions in my portfolio. I reduced Procter & Gamble to 3.8% of my portfolio. Now, I'm looking to add back to Procter & Gamble, but right now, Procter & Gamble is just ripping there. Could go even higher, maybe. I reduced it. I'm not looking currently to reduce it even more. If this goes at 180, 190, then I may be looking for a even bigger reduction. Remember, Procter & Gamble, Pampers, Gillette, what else do they have? A lot of major companies that they bought up. Procter & Gamble is a defensive stock. This is why my portfolio is unhinged. I'm still at 163,000, exactly as I was last week, although we did have a major correction. So almost zero movement. Actually, if I would have stayed in cash, I would be even positive. But I didn't, because I saw that that's what the opportunity. Never let a good crisis go to waste. We don't know who exactly said it. Was it Winston Churchill or the other guy? I'm forgetting his name. But never let a good crisis go to waste. So I did buy a lot of stock. Okay, so that's it for Procter & Gamble. 3.8% of my portfolio. Now AbbVie is a 0.62% of my portfolio. This is so low, but it is so massively overbought here on an RSI of currently 80.67, way above a 70 RSI. This is an interesting stock. It's not a growth stock. It's a growth-ish stock back here. Even in the 2022s, it just ripped. It also yields a 3.07 dividend, although it's now up there in its peaks. They have a 263% dividend payout, which is far too large for my taste, but it's a great company. It's an exceptionally great company. Just take a look. Even at their performance in the last week, 4.35% growth in the last month, 19.79% growth in the last 3 months, 14% growth. Let's just skip to year-to-date growth, 70%, and 1-year growth, 70.52%. It is a great company, currently on the technical, a strong buy. Let's just see what happens with AbbVie. Currently, I'm at 0.62% of my portfolio, looking to add back to this little fellow as soon as it is going to have a major correction. 1000%. Trees do not grow to the sky. So let's go to positions that I added to, and that would be hims and hers. Currently at 5.66% of my portfolio, a major risk for me because I'm currently at negative 11.29%, so I'm minus 1100 euros here. Really, really risky investment. Let's just say it's a trade. It's just a trade for me, although yes, hims and hers do predict major growth in their, basically they're a healthcare wellness company, more wellness than healthcare, because they also sell GLP-1 derivative drugs. They had a major pullback, the hims and hers. Never let the good prices go to waste, but I added far too early up here, and then it went down once more. I added 2 times down here. So I'm currently down. I was down over 20% on this position. Woo, with over $11,000. Okay, 11,000 euros invested here. It's a really, really risky investment. Okay, so if there is a major economic correction now in the market, although we did go through a correction, and I do see it as a major pullback that is going to result in a bullish uprun. Still bound, range bound. Let me see. Still have the S&P open. Oh, let's just open it up again. Here, I think we are going to be range bound in this upward trend. Even I could see also a uprun to the 50-day. This is the 50-day moving average. The green line, the blue line is the 100-day. Up to the 50-day, test it, and maybe come back down again. We are in dangerous waters right now. Okay, next up, Vernova. Sold it, bought it, added. Yes, currently at a 3.83% of my portfolio. Ticker symbol GEV. I added to Vernova once more. Still on that AI hype. They need to generate energy for the AI. AI is not going anywhere. We do need a lot of compute, and we do need a lot of energy. And there are the grid system masters. So let's see what they're going to do. They had a major correction here, which is welcomed for my part. So let's see how they're going to handle it. I see Vernova as a very good company. They have a dividend yield of 0.08%, so almost nothing. But they're trying there. They're trying. Their last report was negative, as always, but it was pretty negative, 64% minus there. A surprise of 64% on their earnings. Yeah, but there's a lot of need for what they do. And because let's just say their projects are like 5-year-long projects. So until they see results, it could take a while. This is why those are just projections. Okay, so Vernova added to that Brookfield Corporation, so not Brookfield Asset Management. Brookfield Corporations added to that position, increasing my position to 1.72% of the portfolio. I'm really bullish on Brookfield, but waiting for right opportunities. It's going to be a long-term holding. Even if they have a major correction, I would just see it as a buying opportunity. Brookfield has holdings in Brookfield holds 75% of Brookfield Asset Management. So it's kind of, and they have a really complicated system. I don't like their complicated hierarchy, but they also are not decentralized. They're more centralized. So they're not like Berkshire Hathaway. If they buy a company, they're not hands off. They're actually hands on, really hands on. They implement their management then, and they have a major partnership. I will call it a partnership, although maybe something else, with Oaktree. So let's see how this turns out. But the company is great. They have an exceptionally good CEO. That's a killer right there. Their CEO, really good CEO. Okay, let's move on to Palantir Technology. So Palantir Technology has had a major correction. Everybody has had a major correction, except Procter & Gamble and the defensive stocks. Major correction, Palantir. Could this go even lower? Yes. Show you something. Palantir right here. Close up a couple of stocks here. No, you're not. Anyway, so Palantir sitting here at its 50-day moving average, surpassed it, tried to came back to it, didn't make it. So a correction to the 100-day could be in play here. But let's see what the next week holds. We're going to go to our risk assessment just in a couple of minutes. And we're going to also talk about what my predictions are for the next week. So take care with Palantir. It's not oversold. If you want to have more security, maybe wait for a correction to the 100-day moving average in RSI, even under its 4Ds, 20 something, 25, 20s would be exceptionally good opportunity to re-enter Palantir. Now, my entry point at Palantir was at 60 something dollars, so it was down here. I sold it completely, not a panic sell, but my assessment is that Palantir could have a even bigger pullback because it didn't reach the 200-day moving average, and that's roughly at the 200-day moving average is where we will see much bigger opportunities. So keep an eye on Palantir. I added to Palantir, currently having 2.51% of my portfolio. Let me just rearrange them according to weights. So G talked about, okay, Rocket Lab. Added to Rocket Lab. What did they do? They build rockets. Pretty obvious. Increase my position to 2.78% of my portfolio. Why isn't it working? Come on, Rocket Lab. There we go. Major correction here. It reached here its oversold-ish position, had a major sell signal already triggered back here. Reduced my added to this position. I bought it last week on this major pullback, added to it. I'm currently still in a negative 70%. But I think Rocket Lab's going to have. They did report results, and their results were pretty good, I can remember. Take a look here. Yeah, they were flat on EPS and had a 1.38% surprise on revenue. So Rocket Lab in the positive there. Had a correction. Bought some of it. Hope it's going to go up. Looks like it's going to go up. But what the future holds, nobody knows. Currently at 2.78% on my portfolio. And let's move on to Realty Income. Added to Realty Income. This is a REIT yielding a 5.54% dividend, which is pretty good. The dividend X date is coming up. Yep, it's Monday. So it's too late. So it's too late for a buy in Realty Income. But let's just say, so ticker symbol O at currently 2.7% of my portfolio. Let's just say they're getting in their overbought-ish territory then, and we could see a correction, and that would be a good opportunity to add to Realty Income. I'm going to use it. I'm going to use that opportunity. A good opportunity for me. We already talked about Palantir. We talked about Brookfield Corporation. So that's it for positions that I added, but I did open a couple of new positions. So let's jump to new positions. We are back with UnitedHealth at, let's just wait them here. Yeah, that's it. So let me finish with UnitedHealth. If I started with UnitedHealth at 1 point, let me reverse this before the slowest. Grab that. We're going to start with Berkshire Hathaway. I added, I reduced. I'm currently at 0.61% of my portfolio. Berkshire Hathaway. Why? Well, Berkshire Hathaway is overbought. It's massively overbought here. They reported their earnings. The earnings were exceptional. Exceptional earnings. Warren Buffett released a letter there on the weekend. They reported, what did they report? Over, I don't know how many billions they paid in taxes only to the US government. So there you go. Berkshire Hathaway, one of the best companies in the world, with Warren Buffett at the top and with the late Charlie Munger, passed away in 2024. One of the best companies you can own. Why do you own only 0.61%, Norbert, if it's the best company? Well, they're waiting for a better opportunity. Price does matter. If Berkshire Hathaway, I read a lot about them in the last weeks, and one thing that stood out is they don't buy back stocks that often. And when they do buy back stocks, and they do buy back their own stock, they have a really interesting take on that. Their stock is mostly overpriced, and when it's fairly priced or underpriced, they will rather buy other stocks because other stocks will be then even more underpriced. So what they're saying is when there's opportunity to buy their own stock back, there's clearly much bigger opportunity to buy other stocks and make even more profit, which is going to make them even more profitable, and then other people is going to buy their stocks. So yeah, there we go. I'm waiting for a correction because that's why I'm going to buy Berkshire Hathaway, seeing it as a really good company. Why don't you buy a company that Berkshire Hathaway buys? Well, their philosophy is the company will be profitable that they are buying, but it's going to take 10, 15, 20 years. So on the short term, it's better to buy Berkshire. Okay, PepsiCo. Edit. Whoa, what's going on here? The web is down. Nevertheless, PepsiCo, we can see their stock right now. Okay, something went wrong here with the API from a platform that I'm using. PepsiCo, added to PepsiCo, currently at 1.09% of my portfolio. Had a major run, PepsiCo. I'm waiting for a pullback, maybe going to add back to it. Currently yielding a dividend of 0.57% yearly dividend. The X date is coming up in roughly 6 days. This is until the X date, 5 days, 70 hours. So this means roughly 6 days, and the 7th day at X date. So that's too late. The X date cannot buy stocks, and so your stocks will not be considered as they will not be considered for the dividend. Next up, I bought. I think this is the second company after Berkshire Hathaway as a Berkshire Hathaway-ish companies, which is Markel Group. They are in a reinsurance buying and holding company, and well, so I only bought one share. They never had a stock split, as if my research is correct, and one stock costs 1,877 euros. So yeah, definitely a stock to watch out. They did have a pullback. I can't show it on the chart right now. I don't know why this is down. Let's close up a couple of things here. They did have a major pullback, and I saw it as a buying opportunity. I should have bought it even earlier, but hey, that's it. Next up, opened a new position in Diamondback Energy. Diamondback Energy had a major pullback. It is, and this is wrong. This is just wrong. Diamondback Energy ticker symbol FANG. I'll show you this very quickly. They are in a downtrend. So this is for this chart. Here's the trend. If they break out of this trend, this would be perfect. Also, dividend coming up. They are a good dividend yielding company, 5.33%. Don't know if this is correct. They were at 3-point-something%. They are going to have a dividend of $1 a share, currently at $158 a share to buy the stock. So for 151, you're going to get $1 on the 6th of March if you buy it before the 6th of March. Proof of thought. Think about it. Think about it in the next way. They are not drillers. Yes, they are drillers. So they're not refiners, but they're drillers. And if drill baby drill is going to come to fruition, Diamondback Energy is going to profit from it. I don't know if I'm going to hold Diamondback Energy that long. I still could see a correction here to the pandemic peak levels. Was back here. Even before the pandemic, Diamondback Energy had a major pullback. So good company if you want to get into the drilling business, but you have to take care here with Diamondback Energy. I have a really small position. As you can see here, it's only 1.32% of my portfolio. Maybe add more to it later on. But if it's going to go sideways, I'm going to pull back from Diamondback Energy. Okay, next up, Caterpillar. Hey, it's working again. Perfect. Okay, so FANG. Can I show you FANG? FANG, there we go. Currently trying to trigger, so going back to Diamondback Energy, currently trying to trigger a buy signal here. So we could see more upside for Diamondback Energy. Okay, now let's move to Caterpillar. Take a symbol CAT with a current 1.42% of my portfolio. Boston shares on the pullback. They trying to trigger here buy signal once more. Caterpillar. If you didn't hear of Caterpillar, let me just make a quick introduction for Caterpillar. Building some of the best machines for construction out there. So if, let's say, major builds could come in the next years, Caterpillar will surely profit from it. Also yielding a 1.63% dividend year to year. Just think about the major places that could profit from Caterpillar. Sadly, places like Ukraine, places like Gaza Strip, other things, the build-up of major data storage centers. So Caterpillar could profit from build, baby, build, but my position is really small because I'm cautious with Caterpillar. It also, if it's a recession hits, then nothing will be built. Okay, let's move to Nvidia. I opened a new position in Nvidia at 1.48% of my portfolio, bought 20 shares. Let's just say yes. So on Friday, I bought 20 shares, but it was before. You see, I already have a 3.25% gain on those 20 shares. Not a big investment. let me show you something interesting about Nvidia. So they went sideways from June 2024 till now. The top last year was at 124. They're currently at 138. They're currently 124. I could see a range bound here for Nvidia, but Nvidia is having revenue growth even. They will not grow as strongly as they did until now, but they will grow. This is not Cisco. Cisco did not have this kind of revenue. Cisco is still, okay, so systems. So if you would, I have to show you something really interesting. 5 years and then even more. So if you bought Cisco in 2020 at $74 a share, 2000, okay? 25 years later, you will still be underneath that. So they care with this company, but Cisco did not have Nvidia's revenue. People really do need their chips, and they are a good company. So this is why I bought Nvidia, and now I'm really thinking about becoming a long-time holder because if I missed the train back then, and they're now yielding a good dividend, go back here to Nvidia, they're yielding a 0.03 dividend. It's not a good dividend, but they are looking forward to growing this dividend. And this could transform in a Apple kind of company in the upcoming year. So I'm going to hold this position. When it's going to have an even bigger pullback, I'm going to add to this position. It's going to transform in a long-time holding, a long-time slowly growing company, and maybe in a couple of years they're going to have the next innovation. Remember CUDA Core. CUDA Core was a major innovation for Nvidia, and that's going to explode again. So let's move on to UnitedHealth. Added to UnitedHealth, it has been beaten up like a... I'm not going to make any kind of comparisons. Has been beaten up really hardly here. Currently sitting at $474 a share, trying to trigger a MACD buy signal back from a RSI low of 27. They had two pullbacks, one on the assassination of their CEO, sadly, and one now due to a major investigation rumor. They are going to be investigated, but still, a great company. So who wouldn't buy a great company? I would buy a great company. Are they still overvalued? Let's see here. PE of 30. Yes. But we are in a crazy La La Land period now, so I'm going to take some profits later on UnitedHealth. Next up, MicroStrategy. So this is why I didn't buy Bitcoin. I bought the next worst thing in the crypto world, and that is MicroStrategy. So all you Bitcoin holders or all you MicroStrategy and Sailor lovers out there, hey, he's a genius. I got it. But don't forget, if Bitcoin does not rise, the MicroStrategy is in big doo-doo. The bad is that the Bitcoin price is going to go up, up, up. Economic conditions are worsening. Economic sentiment is worsening. Buyer confidence is worsening. Cash is going to run out. Do you see a major pullback in Bitcoin in the future? Well, I do see one. So MicroStrategy is going to suffer. But until then, they're oversold. They are on a major MACD sell signal. I would say that a 10-20% will be my sweet spot for target for taking some profits from this trade. Only a trade. They do not produce anything. So I cannot invest in stuff that does not produce something. We had a software company, so they say, but they actually just lend their own shares, leveraging Bitcoin. Okay, so bought MicroStrategy, ticker symbol MSTR, currently at 2.1% of my portfolio. Let's move on to the next one. Now, this is a company I believe in. This is a company that produces something. Axon, AXON, and that's also the ticker symbol. Currently at 2.49% of my portfolio. Bought some shares, even added. Okay, so bought some shares. It went up. I reduced my my position. Then it went down, and then I added back up. So let's see how this works out for me. It is, as I said, I'm currently all in. My cash is almost at zero, but I'm pretty confident that we are going to have a bounce. If not, then I'm in big trouble. Never do this. Well, I just did. It's real risky, but hey, I'm a risk taker. So Axon currently at 2.49% on profile. Okay, what does Axon do? I think I already talked about this in my last video. Definitely check that one out. It produces, check that one out. I went more deep into Axon in my last video. So I just Actually, I added to Axon. Why do I still have it as new? This is a mistake. It's not a new position. I added to Axon. It was the last time it was a new position. But new position, kind of Morgen. So, large dividend yielding company. What do? They transport gas. Gas company. The next best thing after nuclear energy is gas. So we are going to, I strongly believe that the energy that we need, because AI is here to stay, even if companies, even if the users of AI, let's just say, even if users of AI will not see major economic profits from using AI, but could see major economic withdrawals from not using AI, they are still going to, AI is here to stay. AI, my opinion, AI is here to stay. AI will need energy. AI will need grid build out, GE Vernova. AI will need fast, efficient, cheap energy, which is gas. Morgen, a US company, gas transportation. Just take a look at how they popped in the last year. Also, let me show you something else. Let me show you that this could get worse. Morgen was back in 2014, 2015 at this peak of almost $45 a share, and they're now at their currently less 5-year all-time highs, less 10-year all-time highs of $27 a share. So this could go sideways, ladies and gentlemen. This could go really sideways. I didn't even take a look at why they had their major pullback. I could do it even better deep dive into Morgen. Nevertheless, gas is the commodity that will be, not a commodity. Is it a commodity? Yes-ish. It's a derivative from oil drilling. So when you drill for oil, you're going to also come upon gas. So gas is really, really cheap and fast, and it's going to be used to power those data centers. So this is why I'm currently bullish on Morgen. Morgen currently, ticker symbol of Morgen is KMI, currently at a 2.55% of my portfolio. And with this being said, these are all the major trades that I did last week. Now let's do a risk assessment for the upcoming week. Let's go to the S&P, MPP, S&P500, the NASDAQ. So just to get a look at this, on Friday it had a 1.59% gain, and the NASDAQ had a 1.62% gain. This is because Procter & Gamble and major companies like Coca-Cola are in the S&P and not in the NASDAQ. So the NASDAQ had a much bigger pullback than the S&P. And then the S&P almost outperformed the NASDAQ because they hold more steadily. But the NASDAQ did beat the S&P by 30 basis points, baby. Okay, 3 basis points. Sorry about that. 3 basis points. So let's do a risk assessment for next week. Let's first of all take a look at economic events. For the next week, we're going to talk about the week from the 3rd of March to the 9th of March. We'll see on Monday, SMI manufacturing PMI coming in, hopefully better than expected, because if not, we're going to see a bad Monday. Then maybe on Tuesday, rebounds. And then we're going to have a ISM services PMI. I think this data is just going to come in worse and worse and worse. Non-farm payrolls on Friday and unemployment rate on Friday and Fed Chair Powell speech. So, whoa, I'm a bit shaky about next week. This is why my investment thesis could go to nothing, because I'm all in. Okay, let's go to our risk assessment here. Let's say S&P is currently, look back here, the SPY was here currently on a MACD sell signal trying to come back here, but it's not. Maybe it's going to go sideways here. So MACD, let's start with the MACD, on a sell. So I would say high risk. It's trying to turn back here actually. But this is due to only to the Friday event. So okay, let's tone it down to medium risk. We're going to tone it up then with the economic events for next week. Okay, so let's add this one. RSI at 44 and going up. So also medium risk. S&P 500 is no longer wasn't even oversold, so it's not oversold. Had a rebound, so I'm going to leave it at medium. Then we're going to talk about economic events, which are currently pointing for me for a high risk in the market. Not very high, but a high risk. Now, one last thing, we're going to get into March. March is a more stronger period of the year, so going into strong period, which is going to lower the risk, and buybacks are open, especially for Nvidia. So I'm afraid to lower the risk even more. Now, one last thing, geopolitical risk. Didn't talk about this for a long time. Geopolitical. It's so. Did you see the interview on Friday between Zelensky and Trump? How can they let them even have open interviews? It doesn't matter who you think was right or wrong, because they flipped out, both of them. Even starting with JD Vance, that's an aggressive little fellow right there. So what just happened is Trump was Trump, and well, Zelensky is the president of a country currently at war for over 3 years. That guy went through a couple of things. He's not that good of a diplomat, I believe. He was trying. He's defending his country. He's defending his country politically, literally by putting boots on the ground. And he kind of attacked Trump, knowing, not directly attacked Trump, but said things that Trump would disagree with, because he's trying to keep waters on a really low level, and he likes to be pulled up. So he misread Trump, or he didn't know how. I don't know. I think he made a mistake. He could have done this behind closed doors. So that's my take. They shouldn't have done this in front of the cameras. So high risk. And there we go. 50-50. So it's a coin flip. Next week is a coin flip. I would say that we all go to church this Sunday and pray for a better week, because pray to God, pray to Joe Pesci, whoever you want to pray to, pray for the next week. Stay safe out there. My Norbert BM. Like and subscribe. Catch you next time. Bye-bye. Bye-bye.